we wanted to talk about today was just sort of the different types of commercial real estate investments.
Yeah.
And honestly, how they're being impacted by what's going on in the market right now.
1,000%.
So I think that's a relevant thing, and it's something we deal with all the time because we're a generalist firm. I mean, from an investment perspective, we really focus on anything with housing for the most part. We've been looking at some flex and industrial stuff as well.
Yeah.
But from a brokerage perspective, I mean, we're generalists, so we really it's sort of key for us to touch everything, and we end up working with a lot of clients who do different things, and I think that gives us a really broad perspective on the market.
Very much so. And I think it also gives us an even better opportunity to demystify commercial, because people, I don't know that many people have touched it or even thought about it. They experience it on a day-to-day basis by frequenting these places, but don't ever think about, hey, I could own a piece of this.
Sure.
And I think a lot of times commercial gets lumped together. So we get to now break out the different asset classes, and people get to diversify their portfolios, as well as opening their mind to another opportunity.
Yeah, so we work, we know a lot of residential real estate agents, and I feel like you end up getting this sort of break of, are you residential, or is it commercial? And then but the truth is, like you said, within the commercial sector, there's just so many different avenues you can go down, and then even within some of those avenues, there's other lanes, right? When I think about like the food groups or the classes of real estate, we talk about like what's type of commercial real estate investing can you do. For me, I think about it like office, retail, multifamily, and industrial. That's like the big breakout for me. And then within those segments, there's like, you could break down industrial into flex. You could break it down to warehousing, logistics, truck yards, outdoor storage. You can take it to a whole another level. And the multifamily side's the same way. And that's where I personally lump in SFR, single family rentals, and mixed use product and all that kind of stuff. But the truth is, they operate very differently.
Very differently, which is so interesting, because when I started working on SFR portfolios and then transitioned to commercial, that multifamily should have probably been my immediate asset class, like the most, exactly, the most relatable, so to speak. But I thought industrial, I would never do industrial. Total opposite. Love industrial because of the breakdown, the flex space. I'm seeing so many businesses come up with creative ideas, these pop-up experiential events where you can go. We went to this bubble experience in the American Dream Mall, which it was just flex warehouse space that they transformed into this whole environment that made you feel like you were literally floating inside of a bubble. And people are getting creative, and that is so exciting to me. And I ended up kind of going down the rabbit hole of the industrial flex warehouse space, and then retail, because I was like, retail, I get to deal with entrepreneurs and build community a different way.
They can be very similar, like retail and flex. So when we talk about flex, we're talking about mostly, under 10,000, 15,000 square feet of space,
I would say so.
And kind of flexy because it's got a warehouse or open space, industrial
like a blank canvas, so to speak.
Portion, and then typically some office or showroom, maybe a hair of retail. It sort of depends. It kind of flexes, right? That's why they call it flex. Not a lot. There's not a lot of that.
And there's not a lot of new demand.
I know, and there's not a lot of new product of that.
No, there is one coming up near my brother's house. It's Norristown, Eagleville area, and I want to say it's 150,000 square feet. So it's under construction, and I'm so excited. I don't know when they're going to officially bring it to market, but it's new inventory, and it's close to where I live. So
small flex units is what they're going to be doing.
Yeah, most likely is what I imagine.
So
and pickleball has taken over.
Yeah. Well, we saw like, I don't know, 2 years plus ago, we saw this craze of landlords wanting to hold out for your big box industrial warehouse users, like your Amazons, right? Those style of users. and not want to go down the route of subdividing or breaking up their spaces.
Mm-hmm.
So I think maybe that had a little something to do with
I think
the
so.
demand,
Yeah.
or lack of supply
Yeah.
component of it, I guess I should say.
Yeah.
But the demand is there. I mean, and what's so
So
interesting
much.
about it is like you could be an HVAC shop, you could be an electrician, you could be like a small widget maker or a small startup business making whatever type
Yeah.
product. But on the other side of it, there's also catering a lot to like the CrossFit users,
Yes.
the experience based typical retail users that you'd see that kind of want to maybe break on rent,
Yeah.
or don't need as nice
Absolutely.
of a space. They don't want to pay, $8 in
Exactly.
net and cam charges alone a square foot, right?
The
Like
nets for
nice retail
retail
kills you. So
are
some of those users make sense of
wow.
flex, right? Yeah.
Oh my gosh. And I feel like the net, well, it's relative because it's in relation to the taxes which go up, maintenance, which costs go up. The costs that are affecting and impacting society at large impact these landlords as well. And so
Right.
then that cost gets passed on, which plug for the investment side, just to teeter back, is great as an investor. You're passing on your overhead costs to your customer
Yep.
and well to your tenant, and then they will pass it on to their customer, but ultimately you still get paid because you're leveraging the asset. I digress. But yeah, the nets have been going, I feel like, skyrocket.
Well, insurance is crazy. Taxes are crazy. I
Yeah.
mean, all expenses really have risen.
Oh my
So
gosh. I mean,
that's a
I
lot of it.
calculated some nets. It was, first of all, the rent was starting at 35, and then the nets were like 3,000 a month
Yeah.
in addition, and I
Yeah.
was like, wow.
Yeah.
Nets were usually like 1,000, maybe 1,500 added on top of the cost, somewhere up. That was like the top,
For how
maybe
much
top
square
of the
foot? For how
threshold.
much square feet?
This one we were looking at was, I want to say it was like 6,000 square feet,
Okay.
around between
Okay.
5 and 6,000 square
Okay.
feet.
Got it.
But yeah,
Yeah.
I sent the quote to the client and they were like, "Yep, it's a no. Thank you so much."
But I mean, your client might pass, but the reality is
There are others that will.
and there's definitely a supply demand imbalance of like quality
Absolutely.
retail,
Yeah.
especially like big box anchored or
Oh
grocery
yeah,
anchored or even junior anchored centers in
they
the
will pay.
in the suburban Philly market, in other markets
Yeah,
like suburban Philly too, but for sure.
they will
So
pay because the malls are going out of business. So retail is going to hold its demand because we frequent those places. As long as the businesses make sense and it's something that we can incorporate into our lives, they should be able to make money.
yeah,
Um, so there's opportunity there, there's growth there, and because online shopping is a factor, if a big box can come in and know that they have a product that customers need and create a space where they will actually go, they will pay.
sure,
They will pay
yeah,
because then they get to leverage two income streams. They can still have their online portfolio and then have somewhere physical that people can come and see, feel, touch, and experience
yep,
their product.
yeah,
We're losing a lot of that. So if you have some of that market share and you do have something that people are interested in, it's almost like not price gouging, but you can almost command your
well,
price.
that's what makes it a good investment, right? Because
Exactly.
you can then drive rent, which drives value. So
Absolutely.
yeah, and then within retail, I mean, you're really talking about, stick with that segments within
Mhm.
a concept idea. You've got shopping centers,
Yep.
grocery, both grocery, neighborhood, regional power centers, malls,
Yeah.
and then freestanding buildings, net lease deals,
Yes.
restaurant. I personally even lump hospitality into there, even though really
Mhm.
it's sort of its own segment sometimes.
Yeah. Yeah.
Restaurants, another one that like from an investment activity perspective has really been crazy. I mean,
Yes.
you list something for sale or lease on the restaurant side, it's priced where it should be.
Yep.
You're almost always getting a good amount of activity, depending on market, of course, and
Yeah.
pricing in the sale over lease side, which
Agreed.
kind of tells you the desirability of owning those assets.
Absolutely.
Um,
Because especially if you can leverage what already is there,
yeah, the
it
existing infrastructure, that second
yes,
gen
that
type
second gen
situation. Yeah,
is so important. And right now, people are looking for smaller spaces
Mhm.
that have second gen equipment because they realize, okay, I don't necessarily need a large footprint, but I do have food for sale. Our lifestyles are such that it's very rare that people are cooking every day.
Yeah.
You're definitely going to have one night at minimum a week where you're like, whether that's Friday night or somewhere in between the week, I'm not cooking, but we have to eat. So these places, these restaurant venues, there's a huge demand for smaller spaces with second generation equipment, and I'm not seeing it.
Yeah.
So that's a huge opportunity right there.
Definitely.
And probably something that's even more attainable. I mean, if somebody
Yeah.
were to say, hey, I'm going to carve out 2,000 square feet and put a hood, grill, freezer in there, and then I have a limited space where I have a counter and cook some food.
I saw a
Huge.
concept in Nashville that was a former, I don't know if it was one of those like self-serve car washes. You know, those ones where you like pull in the
Oh,
bay and you're like, you're spraying your own car and washing your own
Yeah.
car. I don't know if it was that, the former use was that, or if it was an auto garage with the bays you pull into. I couldn't
Yeah.
quite exactly tell, but it was repurposed to very small unit, quick serve food concepts, almost for like the startup style concept.
Yeah.
So like imagine each bay in
Yeah.
a 4-bay like garage.
Yeah.
And each bay is its own
Different restaurant.
and there's no seating on the inside, just like walk up counter. And it's just a small enough footprint to have like a little sort of micro style
smart.
kitchen, and then all the seating is like in the parking lot basically.
That is
And it was
so
it was pretty cool.
smart.
I was like, that would be cool around in like a market like Phoenixville or
Yeah.
you know, one of those type areas that would kill it. But
Yeah,
it's pretty
that
cool idea,
is
right?
so smart because that capitalizes on what became big during COVID, the ghost kitchen.
The ghost, yeah.
Yeah, so now
And they've struggled too now lately.
yeah,
for
agreed.
sure.
But I think that the concept,
concept,
then
though,
is now
yeah.
morphing into, if you can do something like that, it's affordable rent wise. You minimize your overhead, but now you have an opportunity in a dedicated space where people can see you, but you don't have to provide the same level of service. So you don't necessarily need the entire staff
Right.
to accommodate the restaurant, but maybe you can coordinate
You're gonna-
with these neighbors, and maybe there's like a dedicated wait staff
Yeah.
for the parking lot.
Sure.
It's like a modern day drive-in type
sure.
of deal. No movie. But
Well, you boost your sales per square foot pretty significantly, right? Because you cut down, you know, non-revenue generating square footage in a space. So yeah, it makes sense for sure.
Such a good idea.
Yeah, it's pretty cool, right?
I'm going to be scoping out opportunities for us to buy something like that. Honestly, because I mean, we are, especially the further north you go, I feel like the faster paced life is.
Yeah.
And if somebody can say, hey, listen, not necessarily I'm sitting in my car, but if there's a structure that I can just maybe put my order in manually on my phone, and the place is right there, I can see it, but I can have a seat right here. My car is over there. I don't have to wait and be seated and blah, blah, blah.
Yeah.
I sit down, they come, give me my food, I eat, I'm gone.
Yeah.
I mean, I think that could work. Or vice versa, I put my food in, I pull up. They're already doing curbside delivery.
Yeah.
I pull up, I give you the number or whatever, or my car number. You
Yeah.
see me coming and you bring me my food. I just alert you that I'm here.
Yeah.
And you bring me my food.
Yeah.
I
Cool.
think that could be really good.
So that's been a big segment when we talk about so retail class wise.
Yeah.
Like the food service space, especially small footprint, has
Sure.
been an investment segment that people have been very interested, both from the investor and the owner user side. And then we've got multifamily, of course.
Multifamily is still huge in the news because
Yeah.
I've got about 4 projects that are happening around us, Skip Back area, and the homes are starting. I
So
think
expensive, probably, right?
it's insane.
Yeah.
I mean, $1 million.
Yeah.
And somebody sent me a video of when we were younger thinking about what $1 million property looked like.
Yeah.
It's palatial.
Yeah.
You got all this equipment inside, fountains and
Yeah.
pools. Now it's just your average regular
I know.
house.
I know.
And on top of that, it's new construction, so I call them puff puff blow me downs. God forbid we have some major weather. You might
Yeah.
be like
Drywall tape showing, nails popping, like, yeah.
yeah, it's like
The production style. I mean, but candidly, that's the only way you get attainable. I hate to call it affordable, but affordable or attainable style housing is
yeah,
you have to build it production style. I'm not saying not good quality, but you have to build it production style,
right.
and you have to build a lot of it. You have to get the density, or else
Yeah.
it's just you can't make the yields. The builders can't make the yields, which is why the Sun Belt has become partly why it's become so
Yeah.
popular because you can find more product down there. They're building more homes, right? But apartments and multifamily have and continue to be a desired asset class because of that,
Absolutely.
just the housing
Yep.
shortage, crisis, whatever you want to call it.
Yeah. Yeah. And here's the thing, I don't know how much it's addressing the housing shortage slash crisis. Philly says that they're going to appropriate land and they've brought on some
30,000
committee.
30,000 unit goal or
I think
something like
so.
that. Yeah, which is
But
astronomical.
it is
Yeah,
astronomical. And then you have to think about what is the desirability of the place that you're building these units
sure,
in? What are you going to make it look like?
sure.
What are you charging for it? How are you now impacting the community that's around it? Because who are you inviting to come into the community? And as a result of inviting those people in, who's then going to decide that they're going to get out
Yeah,
and where are they going to go? So now I feel like there's a shift happening where you either stay where you are and try and make it work, or you may have to seek out affordable options elsewhere, but that means uprooting your life
yep.
and going elsewhere to start afresh. And I feel like a lot of people are scared of starting afresh. It's
They are, but
the idea is
that's
daunting.
changed. I feel like that's changed recently. A lot of more people than I ever thought that
Really?
I've run into that I know are just making a move, just making a change.
Where are
And
you finding that they're going? That's so interesting.
down south,
Down south.
Sun Belt, Carolinas. I feel like I hear the Carolinas constantly.
Mm.
I mean, North Carolina and South Carolina, but North Carolina particularly is some of the highest growth rates in the entire
Yeah.
country.
Yeah.
Florida's obviously seen a lot too, but it's got a little
Yes.
more of a rockier path.
Yeah, because they're because they're exposed to natural disasters. Their real estate market is tanking.
Yeah.
It's like by the second. It's like sinking sand. It's sad.
But the Carolinas have been pretty. I mean,
Steady.
pocket driven, but it's been pretty steady, and we've definitely seen a pullback in some of the projects we're doing on rents.
Okay.
And that's a function of supply.
Yeah.
But that's how you combat rising housing costs. Is you deliver more supply.
Exactly.
That's the only way. That's really the only way you do it.
Yep.
Right. Just
Makes
basic
sense,
supply
yeah.
demand story.
Absolutely.
But yeah, I'm seeing a lot of people move down there. Yeah.
Really?
Oh yeah, yeah. I think people are getting more comfortable with that, and that's why apartments, multifamily continues to be a strong asset class
Sure,
or desirable asset class, even though it's got its rocky points right now with values and interest rates. But build for rent is another segment. The single family rental market, another segment.
I feel like the single family rental market is huge just because
Yeah, definitely.
a lot of people have a challenge wrapping their head around that transition from renting to owning. Because they don't want to be responsible for the repairs.
Well, there's a rent by choice shift that has happened over the last several years.
I agree too,
Yeah.
because people are realizing the cost for me to rent somewhere that is easily accessible to the amenities of life, as opposed to maintaining a car insurance, paying for taxes, and being a bona fide owner from where I live. I don't necessarily need to own that asset. I can own other assets that
Sure.
augment my income. But I agree with you. People are thinking more about renting as opposed to buying
Yeah.
because of the implications, the long-term implications.
I say rent by choice, but then also like literally 2 seconds later, we had said how expensive home ownership has become. It's like, yeah, part of it's rent by choice, but part of it's rent by necessity too. I mean,
Absolutely.
and what's funny is because the rent by necessity we used to know years ago was a different demographic that just, was more of the C, B product that, has a really hard time saving the amount of money, earning the amount of income to buy a house. Now it's, that demographic, but also that the demographic that we used to buy first time
Yeah.
homes, 300 to 400,000.
They're still getting priced
Now
out.
they're priced out and
Yeah,
can't. So that group has turned into a rent by necessity
it's true.
um,
That's what the
segment.
article was saying. With the single family rentals, are we now transitioning from a space where uh, people are able to own assets? Because before it used to be you get a job, you buy a house, you pay that house off in your lifetime,
Yeah.
and then you're able to have quiet enjoyment, which is
Right.
the whole point of it.
Yeah.
Because then when you look at it, you're beating inflation. If you're just paying your taxes and your taxes are, let's say, 6 grand for the year, over the course of 12 months, I mean, what are you spending? That's like nothing in the
Right.
grand scheme, and then paying for your utilities.
Right.
You're really not spending anything, and you're able to save the majority of what you earn. Now, that's near impossible to pay off a loan in your lifetime, given the interest rates and the fees that are secretly tacked on from time to time. And whereas if I rent, I know what my rent is every month. I can budget for that. And whatever I have, whatever surplus I may have left over, I can save that. But then where do I put it? Now you can
You can
put it
invest it, right?
exactly.
Like
You can invest it.
that's certainly a strategy that we've seen a lot of people
Yeah.
shift towards lately. You know,
Yeah.
Grant, I don't know if you follow Grant Cardone, but he's a big
Yes. I do.
big pitcher of that strategy.
Absolutely.
Yeah.
Well, yeah, I think he was one of the first people that brought commercial to the forefront. And I don't think, beside him, I don't think there were too many people that were saying, hey, it's easier to own commercial assets than it is to own single family, which has been pitched as the low hanging fruit for so
Yeah.
long. He's brought awareness to the commercial space. So, yeah, kudos to him.
Yeah. But most people, as we know, especially the entry level style investors, start in that single family rental
Sure.
space and then transition into the commercial assets. So
Yeah.
you like hopefully by talking about some of these different food groups of classes of assets, you
Absolutely.
sort of see where you can grab onto and move into next.
Sure.
So when we talk about those food groups, I guess the last one we've got is office, which it's so funny. Office is so funny because I feel like I constantly see articles that say, like I just saw one, I think on CoStar, it said like Office having a strong 2025. Like, did you see that? And I was just like, okay, is this real or are we just trying to grab headlines? Like I don't understand
I
because
think both. I
yeah,
think both. It depends because I think they're trying to capitalize on a lot of CEOs saying that people have to start going back to work
yeah,
and trying to kind of establish that narrative like people are obeying and they're going back to work, and as a result we're seeing an uptick. But it's all relative, because if we don't know where the bottom was, if you're not communicating, hey, office was at a sheer all-time low and this is the marker of what the low is, an uptick or a strong year can be a basis point above what it was
yeah,
doing
right,
last year.
right.
So you could be using the words in a sexy way, but what does it really mean?
And I feel like Office is not in some locations,
Mhm.
some assets terrible.
Yeah.
But I think in other locations, it's really not doing as bad as
Agreed.
the world is led to believe. I
Agreed.
mean, I think Office had a lot of office owners had the same sentiment that a lot of these big industrial owners had.
Yeah.
I'm gonna hold out for like the headquarters that's
Yep.
gonna come in and take up 50,000 square feet of my office building. Whereas if you just looked at it a little bit differently and broke it up like flex units,
Yeah.
there's a lot of demand out there for users that want to rent 1,000 to 2,000-3,000 square feet of space. And I know it becomes very inefficient as a landlord to chop up your spaces and do your fit out, but there's a lot of demand for
Yeah.
that segment.
Because if you can set it up in a way where knocking down walls is not a big deal
Yeah.
and it doesn't cost you a huge amount of money,
Yeah.
you're golden.
Yeah.
You can switch it in and out and expand the space or minimize the space. And guaranteed, the smaller spaces, people are hunting for those.
Yes. Yeah. Exactly. And it's really not that intensive as
It's
it's
not.
made to seem. Like you're a
It's
medical user, yeah, your fit out's intensive, but
Right.
but general office services type use like
They
financial
should take a page
services,
out of
general.
the flex
I mean, yeah,
space.
like you get creative and you work with the office space
Yeah.
you have. You're really not super demanding. Most people
No.
we've found, right, are not
Yeah.
super demanding. Even us as a company, we're not super demanding.
No.
You get flexible, sort of the opportunities in front of you with what you can work with.
Exactly.
Office
And
size, conference room size, that kind of
that's
stuff.
exactly it. The
Yeah.
landlords being open.
Yeah.
I think if the landlords are open to hearing the concepts and not so rigid in this is office, and so if you're not going to give me an office space, then I can't do it.
Yeah.
No, even with my daycare client, we were looking at office spaces, not always ideal only because there's an outdoor requirement.
Right.
But if the space is large enough, they could have done something inside to
Sure.
satisfy
Sure.
the play space component, and office would have been a great category
Yeah.
because we were at once accommodating a large number of people. There was typically a break room or a conference room, and all of those things could possibly be repurposed. So I think landlords are starting to see that, and perhaps maybe it's the mindset that is shifting, and so it is playing into a more optimistic perspective, saying that I don't have to just be waiting on the next dentist
Yep.
or the next small business and their employees to come in.
Right.
I can be able to leverage my space to accommodate anybody who has interest
A variety of uses.
within reason.
I think if your suburban office
Yep.
in like highly desirable family oriented areas where
Yes.
you're at home with kids and you need to get out of the house and do an
Yes.
office, and your suburban office product, you've got a really nice fit and feel of the amenity spaces in the building, and you have small flexible footprints. I think that's a pretty decent,
Agreed.
pretty decent investment. I mean, you got to watch out for the hurdles, the pitfalls
course,
of it all,
yeah.
but pretty decent investment. I went to a Globe Street multifamily conference actually last week.
Oh,
And
cool.
somebody asked a question. Willie Walker of Walker Dunlap was speaking, and he was a keynote speaker. And somebody asked the question, "What would you invest in right now?" And he quoted Dr. Linneman, who he was previously talking to on a podcast or webcast of his. But
Does that mean it's saying
oh no, we maybe
sayonara?
lost some battery.
Mhm.
It's all right. We still got this one going.
Okay.
Yours. He had quoted Dr. Linneman, and let me take a step back so we get the whole thing.
Yeah.
So I went to a conference, a Globe Street conference last week.
Oh,
It was a
cool.
multifamily conference, but somebody had asked a question to Willie Walker, Walker Dunlap, what would you invest in right now?
Mm.
And Willie quoted a conversation he had with Dr. Peter Linneman, economist, and he had said that if I was rich and wanted to stay rich, and I'm paraphrasing this, but I was rich and wanted to stay rich, I'd buy multifamily right now. And if I wanted to get rich, I'd buy office.
Yeah.
Which is kind of I'm bringing that up because we're just talking about office.
Yes.
Office space was kind of, I thought that was a pretty interesting statement.
I mean, it plays right into the buy low, sell high. A lot of people are not focusing on office right now. They're exploring other opportunities. However, if there is an office space available or, a complex that's available that would be selling at a lower price point than it would normally be, you buy low, you sell high. And in this case, even if you hold it, as long as you're open to the idea of different businesses or different concepts coming in and leveraging your space, you can absolutely make money.
Find opportunity. Yeah.
Yeah, you can absolutely make money.
So that we sort of touched on this, but let's close it out, I guess. What asset classes are performing best right now, and what's performing the worst in our market? Where do you see opportunity? Where do you see stability? I'm asking you a bunch of questions here, but
That's good.
Let's start with that.
Okay, so performing the worst, and I'm going to say worst relatively speaking, I would say would be office.
Sure.
Because
we're telling somebody to go invest in, and we're saying you're saying it's the worst, but it's relatively speaking. I agree with you.
Relatively speaking, it's
but that's
not,
where you find opportunity, right?
Yes, it is where you find opportunity, and it's not in the worst in the sense that it's down in the doldrums. It's just the worst in terms of demand. I would say demand, actualized demand, retail, and then Ideal demand, small second generation restaurant.
Yeah.
If you can find that, it's going to be gone so
Yeah.
quick. That is like an immediate paycheck.
Easy, pretty easy to release
Pretty
too, right?
easy,
Like when
yes.
your relet risk is pretty minimal. Yeah.
Absolutely. And then my third category, I would say industrial flex warehouse
Okay.
space. Because if you can find the right circumstance, the right square footage, and the right landlord based on your needs, it's going to go quickly and you should have some longevity there. Retail, you're looking 3 to 5 years, you may turn.
So if you're an investor and you're looking in the market to purchase, those some asset classes to sort of
Yeah.
think about exploring.
Mm-hmm.
From my perspective, just touch on the multifamily side, just because that's
Yeah,
sort of
that's your wheelhouse.
my world. I still think multi is a great investment class. It's just a matter of kind of with anything for the most part. It's with buying, getting in at the right basis and making sure you understand the external factors that are at hand, the interest rate risk that we see today, the supply
Absolutely.
issues in certain markets, and understanding how to underwrite that stuff. Otherwise, I still think that's a great asset class that's still performing. It's just a matter of maybe not as aggressively as it was recently. But I think with the pullback in new construction in the next couple years, we're going to see that same sort of boost
Yes.
in performance. So I still think it's a great asset class. I also love mixed use product because I think
Me too.
right,
That's
because
a good one.
because it
Yeah.
combines
The best of both
the
worlds.
best of both worlds. It brings in that retail component, and
Sure.
I'm also from an investment perspective big on how do you create an experience,
Sure.
right, for
Yeah.
your tenant,
Yeah.
your resident, whoever
These
it is.
15-minute cities that are popping up.
And,
Yeah.
and to me, if you do it the right way, mixed use kind of creates that experience.
1,000%. I agree wholeheartedly. How would the average person that let's say they were saving up to establish their first residential purchase, how could or would they pivot their mind to say, okay, I don't necessarily just want to buy one property. How could I get into a mixed use investment situation?
Yeah.
And how much per se, just ballpark, would I need to have to even be a viable candidate to participate?
Yeah, absolutely. And with each one of those asset classes, there's different risk, right? There's different components of risk you evaluate, different levels of reward, obviously,
Yeah.
but different components of risk. And I think with mixed use, that's kind of an interesting one because there's two sides to it, right? And
Yeah.
usually when you think of mixed use, I think of apartments or some residential with retail for the most
Yes.
part, some
Yes.
office, some medical
Yes.
maybe. But when I think about risk in terms of that regard, you de-risk a little bit because you've created multiple
Streams and opportunities for income. Yeah.
exactly, where you sort of hedge against what's happening in the market.
Absolutely.
But you risk a bit because you do become impacted by financing a bit, right?
Yes.
Like a group that finances multifamily very aggressively is probably going to pull back a little bit or look at it differently with your retail
retail.
component. And you really need to understand the level of retail you're delivering to a
Yeah.
building, or both from a square footage and a revenue perspective, because that impacts your financing.
Yeah.
And then the buyer pool shifts too. I mean, there are people in the market who are very focused on certain asset classes and don't want
yeah.
to mix around. So that to me is a risk component you have to navigate.
That's so interesting.
For sure.
Maybe we can create a new crusade of mixed use investors.
There's not enough of them.
Right, because I
Yeah.
think that niche kind of goes under the radar.
Yeah.
You see so many, it's either or.
Well-
It's
well-
retail or
Well, they're really not the complete opposite, but they're very different. I mean, people who gravitate towards multi love the short-term lease factor, love the hedge against inflation, but it works the opposite sometimes too, if you think about it.
yeah.
But they love that component of it. They love the easy financing part of it. And then on the other side of it, you got, retail, let's call it retail in a mixed-use building. You've got longer-term leases.
Yeah.
You've got, a way different type of financing. You're
Sure.
evaluating a lot heavier on credit. Like, they're very
Yeah.
different. So I think people